Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Over the past week, gold has mostly been consolidating in a tight range, with bearish pressure creeping in. A surprisingly strong non-farm payroll report and China stimulus have dampened gold's bullish momentum. But the escalating geopolitical tensions are keeping a floor under prices. This week, traders should keep an eye on the US CPI data and any new policy details from China. Both could stir up some market action. So in today's video, I'll first break down the recent technical moves and then shift the focus to the key risk event that could shape gold's next moves. Let's jump right in. Looking at the gold against US dollar daily chart, we can see gold has been bouncing between $26.25 and $26.75 for the past week. Even though it's closed lower for 4 straight days, those long lower weeks suggest that sellers haven't taken over completely. That said, bulls don't seem overly confident either, especially as we get closer to the $2,700 level. There's a lot of uncertainty in the market. In my view, this tight range is likely to stay in play for the short term. Well, if we break out of this zone, the next targets would be the all-time high of $26.85 on the upside, or the September's high of $25.85 on the downside. Well, based on what I've described so far, you can probably tell that I think gold is likely to stay in this consolidation zone for now, as both bulls and bears are quite evenly matched. On one side, last week's September US non-farm payroll report came in way above expectations, with July and August revisions adding another 72,000 jobs. The strong labor market has pretty much wiped out the chances of a 50 basis point cut in November, with markets now pricing in 2 25 basis point cuts by year-end. Optimism around a no-landing scenario for the US economy is building, and this has driven the 2-year US Treasury yield up 22 basis points last Friday, the biggest single-day gain in 6 months, and pushed the dollar index to a 7-week high. Naturally, higher opportunity costs are putting some pressure on gold. China, meanwhile, has paused its gold purchases for 5 straight months, according to the latest Forex reserve data. On top of that, the government's heavy support for the property market and massive liquidity injections into the stock market gives traders alternatives to gold. Neither factor really helps gold's bullish case. While on the other hand, the reason gold has been able to hold up despite the non-farm payroll shock is the continued escalation in the Middle East. Markets usually struggle to price in such geopolitical risk, so if there's any shift in rhetoric that increases the risk of an energy supply shock or, like Western involvement, investor sentiment could take a sharp turn. And actually, Brent crude is a key gauge for supply risk, and we could see a stronger correlation between gold and oil prices, lending support to gold. All in all, unless we get hit with some major new developments, I believe gold will continue range-bound trading in the near term, as the battle between Fed rate cuts and geopolitical risk keeps it in check. Looking ahead this week, the US September CPI data will be a focus. With the labor data making a 50 basis point rate cut in November less likely, I think the market will be more sensitive to rising inflation than cooling. In my view, if core CPI comes in significantly above the 3.2% consensus, the market might scale back expectations for the next cut, which would be a headwind for gold bulls. We're also expecting to hear from several Fed officials this week, most of whom are likely to signal a 25 basis point cut in November. But if anyone hints at pausing the easing cycle, the dollar could get a boost, further weighing on gold. And lastly, China's stock market reopens today after the Golden Week holiday, and the National Development and Reform Commission is set to update and address some questions about potential fiscal policy measures. So if traders get more details about some domestic demand and consumption relevant policies, boosting market confidence and pushing stock indices higher, we could see some bullish capital flowing out of gold, weakening its momentum. So that's pretty much all for this week. If you have any ideas on how the upcoming data and speaks might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!